la famille.
Just to get a sense of the knowledge of the room in terms of blockchain, do you all know what like a token is, a security is, what an ICO is? No? Some people don't know at all? No? Okay, cool. We can start. So Hubert is a longtime friend of the family, and he was probably the only blockchain expert when you talk about blockchain in the law. Anne-Sophie from ConsenSys, they have probably the largest portfolio of blockchain initiatives in the world. They were created by one of the co-founders of Ethereum and have influenced the market quite a bit. And actually I've had the chance to know working on his startup with the family. So just to get started, maybe actually you can tell us what an ICO is, why it became such a thing, and how the model evolved to a STO, and whether it's the same thing or not.
Sure. So an ICO is basically, as some of you know, is basically you owning some tokens of someone else. Now these tokens could mean anything from a company. You could design a token saying, this token means that in the future you would be able to buy services from my company. And I'm going to divide this into a bunch of smaller units. I'm going to call them tokens, and I will sell it to you over the internet. Now, fairly simple. You could, in theory, tokenize anything, an idea, a product, a future product, or anything else. And eventually, this became such a big thing, specifically because of Ethereum and because of the standard that they came out with, which was the ERC20. Essentially, what this meant was anyone who creates a token now has certain characteristics that they need to attribute to it, like the name, the symbol, and so on. And anyone could build an application which records and shows you how many of these tokens you have. Now, this combination of blockchain, which is immutability of who has tokens, and the ability to actually see what tokens you have, made it a worldwide phenomenon, as you know. ICOs in 2017 were absolutely gargantuan. And ever since then, of course, it's died down a little bit because speaking from a purely corporate finance perspective, it didn't make sense from a risk-reward perspective. You were investing in a company, you were taking equity risk, but you weren't really getting equity returns. So it didn't work properly as a corporate financial system, and it kind of died down ever since. And today, now, people are moving more towards an STO. What is an STO? It's basically the same thing, except now you're not tokenizing an idea or a future product. You're actually tokenizing your company itself. So you're selling a small part of your company over the internet, which is now possible and wasn't before because you needed someone to validate that small part of your company. So today we're in the era of STOs, and that's the new trend. That's what we're here to talk about and see what the future is for that.
We are very interested in all these things because we think that the world has started to work on debt, then it has started to work on equity, some of the world we know, and we believe that blockchain might offer an access to these financial instruments to lots more people because the recovery would work. And I believe that the craze also started because it was the first time you could bet on money, and money makes people crazy. And that's why there's so much regulation around it. And that's one of the problems that we've seen. 2 weeks ago, the SEC sued Kik for their issuance 2 years ago. So that was not a security, but this SEC is claiming that it might be. Maybe, Hubert, you can run us around what the legislation was and how it's evolving, and what are the future prospects for the whole ecosystem.
Thank you, Balthazar. I will not borrow you on with a legal description on what happens in the world, but to be short, when you see the two acronyms, ICO and STO, see, the O offering is the same in the two acronyms. Then you have securities or you have coins. Securities is definitively a legal word, when coin is definitively not a legal word. And the issue comes specifically because people don't understand or don't know what do you mean or what does it mean by securities or by token. Because a token is not a legal word too. It is something that we we think to know, but we are not totally sure what it is, when a securities is something which is very well defined. And this is clearly the issue. Why? Because, as you explained, at the end of the day, it is something to raise money for funding a company, to be short. Whatever the funding, whatever the form of the funding. But if it is to fund a company, the SEC has been very clear. The Howey test. Who knows the Howey test? Few of you. Okay, the Howey test is a test from the US Supreme Court before the Second World War, which is today the test to define what is, legally speaking in the US, a security. And if it is a security, you have to follow all the reg issued in the US, including the laws and the regulations. You have a test. I will not give you all the detail of the test, but one of the tests is it something to fund your company? If it is for funding your company, at the end of the day, whatever the form of the token is, a share or a bond or nothing, if it is for funding your company, it is a security. Then, in Europe, we don't have the same vision. First, because we don't have an harmonized regulation on securities. We do have an harmonized regulation on offering, but not on securities, which is part of the issue. I.e., we have the same rule book, if I may, to sell or to offer a security in Europe, but the definition of security in Europe differs from one jurisdiction to the other. Not very simple. And again, to be short, what is a securities? It is a share, it is a bond, it is a fund, something which give access to your capital or your debt. Something to fund a company. What we have seen now is something interesting, since the last case that you mentioned, Balthazar, that the SEC has issued early April some guidance whether or not your token should be considered as a security. Please download this guidance. It is very useful and very, very practical. And something very interesting that the SEC has issued a non-action letter. A non-action letter, it means in the US regulation, you will not be prosecuted by the SEC or the prosecutor. A non-action letter for a company who has issued utility token. It is the first time in the US that the SEC has qualified a token as a utility token. But a utility token in the US is like a club-made coin, a club-made token, nothing more. And nothing more, specifically nothing to fund the company. But if you add the guidance issued by the SEC plus the non-action letter of the SEC, you have a very good knowledge on what is the situation in the US. In comparison, in Europe, we don't have such a vision, as I mentioned before, and we're in the process to build something new. First, on a local basis, each jurisdiction, like France, is issuing its own regulation, and then in the next 2 or 3 years, the EU Commission will propose something to regulate the ICO and specifically the STOs.
And so do you all guys think that the regulation is going to move fast enough and that the framework is clear for anyone here to issue a token, whether it's a security or not, and not be prosecuted in the future? Just as a...
You may recall, for those who have been interested on the ICO wave in 17 and 18, that one of the big game was the location of the issuer of the token, is to find the best location for the issuer. What does it mean by the best location? Of course, tax neutrality, first, and second, regulation, a friendly regulation. This wave is, for me, now behind us, clearly. Why? Because wherever you will locate your company, your SPV, if you distribute, if you sell your token and whatever the form of the token is in one country, in the US and in Europe, you will be attracted by this country for the securities regulation. The most important is to ensure that when you sell your token, you comply with the local regulation. And now more and more the local regulations are clear, even though they diverge on the qualification. For instance, the same token can be qualified in Japan as a money transfer, and in France as a token, and in the US as a security. It is the same token, but the regulation differ. Why? For cultural reason. But yes, to answer to your question, now we can be 90% sure when you issue a token, if you want to issue a token, to do something which is clear with no risk to be attracted by any regulation or by the prosecutor.
Thank you. Yeah, maybe I'm just going to add something to that. And one point that I find quite interesting is that my sentiment is really that the technology move faster than the regulations. Maybe it's always the case, but I think here we really see a huge gap in the sense that if you look at what's possible from a technological standpoint, there's a lot of things which are possible. I mean, you can issue tokens, you can trade them, you can maintain them, have a register on the blockchain. So you can do pretty much everything on the blockchain. But then the question is, what is allowed? You know, in your jurisdictions, what can you do actually in your own jurisdictions? So I really hope actually that jurisdictions will pick up, you know, and start actually to provide a more complete, I would say, legal framework, because I think right now, a bit as you explained, Hubert, it's a little bit patchy, you know, like each jurisdiction will maybe regularize on different types of assets, and it's a bit difficult to exactly know what you can do in each place, and either as an issuer or for your investors.
And so with that current building of the regulatory framework, do you see traditional entrepreneurs re-enter the space? Do you see larger corporations have their own issuance and the use of the technology that makes sense today? Like from when we had a call, you mentioned like La Société Générale, for example.
Yeah, definitely. I think it's quite interesting because so I think we could see with ICO that it was mostly young companies or startups, you know, looking at it. But now we see that definitely large banks, large institutions are looking at it, and they realize that actually there is something that they can leverage with blockchain, and that there are some assets that they can tokenize as well, you know. So yes, I'm sure some of you saw a couple of weeks ago, maybe, or just 1 month ago, in May, Société Générale, we issued the first bond on the blockchain. So it's a bond that they issued internally to themselves, a 100 million euros bond. But still, you know, I think it's a proof of concept, but it's a first step which is showing that first, yes, the technology is working, and that no, it's more a matter of scaling it, you know, than really showing that it's working. So I think, yeah, we see definitely a lot of large institutions, not only banks, but exchanges as well. SIX actually in Switzerland has quite an aggressive roadmap to create a platform for digital asset. Stuttgart Börse as well. I mean, we see definitely a lot of exchanges which are looking at it, which to me is showing that you have an ecosystem of players who are starting to build the platform for tomorrow. So I think it's starting slowly, gradually on small scale, but we can definitely see that different types of actors, whether they are, you know, startup, you know, issuing their own token to raise equity, or funds, or exchanges, or banks, we can see really an ecosystem which is starting to build up, and I think it's quite promising in a way.
And so in this case of equity tokens for these larger companies, do you think it's something you would have to do from the get-go, or you could one day switch from the traditional system to a token-based one?
I mean, I think what's interesting is that we expect that even companies who have reached a certain level of maturity and who don't necessarily want to enter the public market will at a later stage also raise equity through this means. And I think it's a trend that we are seeing in the markets, that more and more companies won't try to push away maybe their entering into the public market, and that's clearly a way also for them, even though they may have raised in previous rounds equities through like non-digital means, that it's also something which could be a solution for them at a later stage.
Yes, maybe one word is to add what you said, we can see two different steps. The first step is exactly what you describe as a possibility for a young company to issue something like a token which more or less represents part of their capital in a digital form. Okay. For more traditional world, the banking side, the insurance side, the fund side, is the tokenization of their assets, which is something totally different. They don't need to issue token for funding. They need the tokenization to facilitate the transfer of their illiquid assets. And in this sense, the tokenization of the assets is the new movement of securitization, because tokenization of the asset is nothing more than securitization on a digital form. And this is something in addition to what you describe.
Right, and the other thing that we're increasingly seeing is that the line between a private company and a public company is being blurred. So eventually, in the distant future, we might get to a point where going from private to public is not as stark a contrast as you do an IPO and you become public. Maybe there's enough liquidity in the private market that you could be classified as a public company, or neither. So that could be another avenue that you could go in.
Just again, one word. As of today, at least in Europe, because in this sense this is an EU regulation, if you want to issue a STO, a securities token, and to trade this STO in a platform, we have a lot of legal issues today. Why? Because a lot of EU regulation have been written before the blockchain, and it doesn't match at all with the token world. And if you look, for instance, of the definition of what is legally a platform, you have a definition from one regulation in Europe, but this definition doesn't fit at all with how a crypto platform works today. And this is why the EU Commission is entering into an important move to see what we have to change in EU regulation to facilitate innovation and to facilitate the STO. But as usual in Europe, it takes time. It will take at least 2 to 3 years.
So you mentioned Switzerland, I know the US, Europe, France. France has just published an ordonnance. Is it something that is legal and viable, or is it just a document that is not really enforced? And how can we see like the driving forces in regulation in Europe?
Who is familiar with the Pact law? Who have read the Pact law?
The Loi Pacte.
The Loi Pacte. Well, there's a few of you. If you have nothing to do in the evening, please see the Pact law, the Loi Pacte. You have a chapter dedicated to crypto, divided in 2 parts. The first part is concerning the ICO, and the second part is concerning the platform and more globally the providers, the crypto providers world. The first part is now fully implemented. The law has been enacted, published, and the regulation issued by the IMF is published too, last week. The second part, which is concerning the secondary market, the platform and the crypto providers, the law has been enacted, published, and the decree as the Règlement Général of IMF will be published in the next days now, i.e. in few days everything will be okay. What does it mean if you want to do something? If you do something in France, it will be legal, valid, and binding. Okay, what happens if I want to sell my token or my securities abroad France in this case? You will be not recognized outside France, but as the IMF should give its visa on your prospectus or on your legal status as a crypto provider, the French government is in a way to think that it will attract people to be in France, and then as the IMF is not viewed as a very, how do you say that to be correct, is viewed as one of the most difficult regulator in the world, to tell something different. If you get a visa from the IMF, yes, you can sell your token or your securities token, even though this visa has not legal validity outside France, but at least it is something which gives you comfort. And the idea of the French government is, look, we will first make something in France, then propose to the EU Commission to adapt more or less the French regulation at the EU level, as we did it, in fact, for the crowdfunding. We did exactly the same for the crowdfunding. We issued a new regulation in France, and then we discussed to the EU Commission, and in the next months or years, a new regulation on crowdfunding will be issued by the EU Commission, more or less 80% comparable with the French regulation. This is quite surprisingly, but at least concerning regulation, you're right. We hope that the business will come now, but at least for regulation, you are perfectly right.
Yeah, and I agree with that. And to me, it's a little bit a shame because I feel like the government has at least tried to create a legal framework which is quite reassuring. So is it complete? Maybe no, not yet. But at least, they are really attempting to give some clarity as to in which cases you can use a blockchain as to maintain your register of transactions. And I feel like, quite frankly, it's a bit underutilized, because all investment funds or alternative funds could easily use it and tokenize their funds, or even for them to invest, in private equity. But to some degree, I feel like, I don't know if it's a communication layer which is missing or something which is missing, but I feel like there's a lot you could do actually, and I don't see that much movements happening, at least versus maybe other countries which have less clarity in their regulation, but maybe more attempts.
Let me just give you an example. Can you imagine that you can have crypto assets in a life insurance contract now, distributed by insurance company? It is possible thanks to the Pact law, to the Loi Pact. You can distribute life insurance contract, and in your life insurance contract, you can have crypto assets in funds. It's just an example that a lot of things is possible now in France.
So there would not be any crypto. It would be crypto that have been regulated by IMF and follow that framework.
No, it will be crypto in the definition of the Pact law, the very broad definition of crypto.
So, with all of this being more possible, what do you think is the driving force behind entrepreneurs doing more stuff or institutions doing more stuff? Where's the blockchain? Because we talked about tokenizing IP, assets, equity, and any other piece of the company. So what is the actual demand that we see today?
I think it's an early adopters market still, because people are very unfamiliar with the technology. They don't know the state of the regulation, like Hubert pointed out. All of this is legal today in France, but no one does it because they probably don't know about it. They're very unfamiliar with it. Investors are unfamiliar with it. The whole ecosystem is still very new. So I think it's a matter of time before this happens, and a matter of a few players making the whole package and giving it to you so you can do it pretty easily, both legally as well as from a finance perspective. So I think it's basically a matter of adoption.
You talk about these actors that make the link between the actual asset and the tokenized part. So I guess there is underwriting of issuance, underwriting, etc. Do we have the actors, the players that know how to do that, and what's their role today?
Well, the whole idea behind this whole decentralized concept is that you probably wouldn't need intermediaries like underwriters and so on to raise big funds, and that's kind of the whole point of it. And increasingly, we'd see new forms of fundraising. Maybe crowdfunding equity would become easier. Maybe you'd be able to issue an AIR, which is the family's instrument, to a wide range of people instead of like 2 investors. Or you could come up with new forms of fundraising. You could have fundraising based on the amount of revenue that you generate if you're a SaaS company. So all of these things can be made easier, and I think the fact that you don't need an intermediary to do this is, to me, one of the best parts of it.
And do you guys think that, like, we've seen finance become super complex, but it's done by people that spend their lives doing it, and now we're talking about usually like products that are issued to broader people, and are they one day going to understand it, or is it just going to be an abstraction?
What kind of, sorry?
Like crypto in assurance vie, in insurance life, mostly people don't know there is crypto. Issuing a R to hundreds of people on the blockchain requires basically everyone to understand. No?
No. It's the same with your iPhone, your smartphone. Do you know how does it work? No, you use it. It's the same for the air. I think it is a good example. What you expect for a lawyer and for you is okay. Your contract is legal and valid and binding, and you can transfer it quite easy and shortly. This is typically what you do with your offer, is to facilitate the transfer of securities token, if I may, or securities or asset securities, and because as of today, you perfectly know, you have to continue to sign a lot of paper when you fund a company at the family. You have some paper to sign it, and with the blockchain and with those new law, yes, you will find a solution. Why? Because as of today, this is quite surprising. In a lot of countries, securities are fully dematerialized. Do you know what it means? Securities doesn't exist in a paper form at all, but they are represented by a book entry as dematerialized securities. Fine, but when you issue those dematerialized securities, you have to sign paper. And with the blockchain and with the new ordinance from 2 years ago, you can now avoid to sign those papers. Why? Because the law has recognized the full transfer of ownership within a blockchain as it was in the paper form. And without this ordinance, it was impossible to give the validity of your transfer on the blockchain. And thanks to this ordinance, now you can transfer securities registered in a blockchain, public and private, with the same effect that a normal security, if I may. France did it, Luxembourg did it, Switzerland will do it in the next months, and Monaco is preparing a law on the same, and Germany is thinking now as a project for registrar, maybe a broad definition of registrar, but more or less is the same issue. At the end of the day, all those countries are in a way to recognize the legal effect of transfer within the blockchain.
Maybe I can add something, or looking at your question regarding adoption on a different angle, more at the technology, because it's something we've been thinking also about, at ConsenSys, especially when you look at the investor standpoint, in the sense that not everyone is crypto savvy, not everyone has MetaMask or wants to deal with their own custody of private keys, and not everyone, knows this jargon. So basically what we've been working on is essentially adjusting a bit the offering maybe to the level of familiarity of the end users of these types of platform, and to offer basically platforms where investors won't need to manage their private keys, won't need to use MetaMask, and will just need to log in with a normal login and password as you do in any type of Facebook account or LinkedIn or whatever. So this is also something that we've been working on, conscious that there are different level of familiarity maybe of the end user, and that this will also trigger larger adoption behind.
Sure. And regarding also the ordinance and the impact, what is the main benefit for entrepreneurs to actually put their equity in a digital way rather than doing it as ever before with the registre des titres, which we know no one updates, but...
So I can break it down into 3 stages of your company's life cycle. There's starting your company, there's running your company, and there's exiting your company. It helps you in all of these 3 ways, in all of these 3 phases. It helps you in starting your company because let's say you start your company and you register your shares on a blockchain. You can raise money through a variety of different ways. You have the option to do so. You don't have to do so, but you have the new option to do things that you couldn't do before, to still raise money in ways that suit your company. Not the current ways of raising money don't suit every business model, and that's kind of unfortunate. But with this, you can have new ideas coming in, new types of companies, and so on. So that's the starting your company phase. And then there's the managing your company. There's the new wave of giving employees incentives, stock options, giving advisors equity, giving investors equity for money, and so on. Now, all of these things need to be managed, and typically if you're a successful company, you have hundreds of employees with lots of stock options. Honestly, from my experience, people don't really know what's happening. That's easier to do because it's all recorded digitally. And the last phase is exiting your company. This again is an optional thing. Today, you don't have liquidity in a private equity market. If you're an employee who has stock options of a company, it's extremely hard for you to actually liquidate that and see the real money behind it. But if you have like a private liquid market, that's possible. It's also possible for your investors to exit. So it makes investing better as well. Again, all of this is optionality. You can choose to do it, you don't have to choose to do it. But the fact that it gives you the option is, to me, the benefit.
Do you guys see companies that already do it in France and applied this framework?
So that's what we're trying to do. We're basically trying to get people to do it because it's all legal and possible. Like I said, people are very afraid. We have a few people that we try to talk to, but it's not a mainstream thing at all yet.
You have another one in Luxembourg, if I am correct. You have other project in France too, and we see interesting project in Germany too. Again, the idea is to facilitate the life for entrepreneurs and for investors, and to avoid the papers.
But I think as far as I'm aware, the only official STO we've seen is the Société Générale one. I'm sure there are some, in the pipeline. Another interesting project in France is Liquid Share, which is a little bit different, but actually it's a consortium of Euronext and 8 other banks who are looking at essentially digitalizing shares of SME to facilitate the post-trade. So it's a bit a different angle, more institutional. But I expect that it's also something which, will come or become live at some point next year.
So from my understanding, what would be very different from the ICOs that were regulated by the IMF 2 years ago? Was it regulated as a security also? Or?
No. ICO in France, not in Europe, but at least in France, are ICO. Is something which is not security in the French meaning. Something which is not a share, a bond, or a fund, clearly. And those tokens, which could be utility token or something different, but which are not financial instruments, which are not securities, are now regulated by the IMF. And everything which is defined as a security or as a financial instrument is regulated by the IMF, but at the EU level, as I mentioned before, because we have this EU regulation on prospectus. Again, the life is quite simple, black and white. I don't know what is black, what is white. But if it is a security, you have to go to the IMF and to be regulated as a security. If it is not a security but something different, whatever it is a token, which is something that we don't know exactly what it is, but it is a token. It is regulated by the IMF, but in a different manner.
And so for all of you, what do you think is really missing for STOs or equity token offerings to really become something that people use? And maybe for both of you, because it's something I've come upon quite a few times now, is how do you advise people that did ICOs in the past to handle the people that became shareholders, and if there is anything to do?
What is missing today is the secondary market, to have a legal framework for the crypto platform, for the platform for tokens, because I have mentioned before, we don't have any regulatory framework for the secondary market due to the difficulty of the EU regulation, not for the French, but the EU regulation. And if you issue securities token, you can do it, but then you have a problem, you have an issue to trade on the market, which is quite difficult. You still with your securities token in your pocket and you can do nothing. Clearly it is missing. Everybody knows, and IMF and others regulators are thinking to find a solution on the interim period between now and when the EU Commission will change the EU law.
Yeah, I mean, I think having a secondary market is key. You know, I think then in terms of, it seems we have the technology, we have the legal framework. So what's missing is really, I would say yes. So, I would say it's first, you know, I think it will get traction once some companies start to issue their token, and that we start to see the benefits. And the benefits are essentially in terms of liquidity, management also of the token, but I think this will come maybe at a later stage. But as people understand that from an investment standpoint, it's a security, it's regulated, so you own actually a share of a company, so it's kind of regular investment, and that actually it opens up the door also of private equity maybe to some investors who didn't think they had access to it before. And that it's more secure in the sense that when the token is issued, it's possible to you know, associate a smart contract to this token and define actually how this smart contract will operate. So even from an investor standpoint, you know actually what you own, and you know when you can resell it and at what, you know. So it's I think there are a lot of benefits, but you just need to see it in the market, and then I'm sure kind of having some platforms who allow this exchange of token will help. So.
Yeah, in my opinion, I think so the VC industry has existed for about 60 years now. There are a lot of norms around how you invest in companies. You have certain fundraising rounds, you have valuations, you have the company growing between rounds, you have preferred stock, convertible notes, all of that. Now, given that it's a 60-year-old industry, there's definitely some merit to how it works today. In my opinion, I think security tokens need to mimic that. They need to integrate with the existing system of fundraising. Sure, there's the whole new way of fundraising, but I still think that's going to be a small part. If you can get the existing industry to move over as a technology as completely, I think that would drive mainstream adoption pretty significantly.
My problem with both answers, personally, would be that there's a chicken and egg problem in building the secondary market when there's no primary, and no one has the real incentives to actually build it. And maybe like someone as a bank or someone has maybe more money is going to be willing to take the investment for 10 years in, and then for the existing industry to adopt it. My problem, what I see from the entrepreneurs we work with, is like they're afraid of failure, and so they don't take an extra risk to look weird to further investors, and it would be hard for them to do it and then come against a VC that says, oh, no, like, I'm not sure about that. And so they don't do it.
You're perfectly right. Let me illustrate what you said. We are managing some STOs and for French and non-French issuer. And one of the questions that we have from investor is, are you sure that the title is valid? Please, can you give me a legal opinion that my title is valid? They don't know. Exactly what you said. We need to educate investors, not only the issuer, but investors, specifically if they are coming from the financial world, to ensure that, yes, it is enforceable. Yes, it is legal, valid, and binding. And right now, I am preparing some legal opinion for those investors to give them comfort. Yes, you can buy it. Then for the difficulty of the secondary market, I am quite optimistic because we can see more and more platforms moving to be regulated, and the day after they will be regulated, traditional investors will come to those platforms, and the liquidity will come. It's just a question of months, years, I don't know, but you have seen the announcement from some big platform to be regulated as an exchange. And I think this move is interesting because it will give comfort not only for the issuer, but for the investors too.
And maybe one thing also I believe which could help is also the creation of consortium. So even though maybe it's not, the end goal, because at the end of the day you don't want to have your token kind of locked in a certain, platform. But as we see, for instance, with Liquid Share, which is essentially a consortium of, like 8 or 9 financial institutions who decide actually to build a platform together to solve a common problem. I think if we see a similar platform basically being built to exchange token, regardless of where the token is coming from, this will help also basically, solve the liquidity problem. So I think this type of platform also in a more maybe private market will help. And the technology is here also to allow issuers and investors to bring their token outside of the platform, on the public chain. So I think the emerging of solutions like this one and consortium who are here to solve, a common problem could also, bring more traction, I hope.
Great. Just last question. 2 or 3 years ago, like the JP Morgans, Goldman Sachs, most of what came out of it was mainly they saying don't touch these things. It feels like it changed, and they're probably the 2 people in the world with most contact to investors. Do you think it's actually the case that they start to not be so worried about it?
Yeah, totally. I think Jamie Dimon a couple of years ago said, no, Bitcoin is garbage, don't buy it. And the next day he went and bought a bunch of Bitcoin. So I think the mentality has definitely changed. People are a lot more willing to accept it. JP Morgan is coming out with a JPM coin, which is a clear signal of change. And then Facebook coin, which hopefully will drive mainstream adoption as well. So I think the mindset for big institutions has definitely changed. They understand it better now. So I think a little bit of the dust has also settled. So definitely, yeah.
Great. Thank you very much. We'll stay here for a couple minutes and get probably water and stuff.
Que la famille.